Hello, we're back again. It's Monday, the 10th of February 2025, and we're looking at where the market is at. There are three things that I would just want us to talk about today. I want us to just look at what the reaction of the market has been to the announcement that President Trump made on Air Force One around the new rounds of tariffs, and what the reaction has been on tariffs, as well as what the crypto market has been in terms of the reaction of the crypto market and where the market is at, and just spend some time deep diving on Ethereum. So the financial markets have experienced a significant turbulence following the announcement by President Donald Trump of new tariffs on steel and aluminum imports, along with threats of reciprocal duties on various imports. These tariffs, set at 25% on steel and aluminum from all countries, have introduced a new layer of uncertainty into the global trading dynamics. And this is the part about these tariffs that's a problem, is that President Trump is saying all, so which means any country that now imports steel and aluminum into the US, there'll be 25% import that is placed on it. So what has the impact been on the market? If you look at the stock side of the market, there was an immediate drop in stocks futures, indicating a negative market sentiment over the weekend, expecting further declines on Monday, which is today, at the opening of the US market. The anticipation of increased cost due to tariffs led to a sell-off in stocks, particularly those in sectors directly affected like manufacturing and retail. Analysts from BMO Capital Markets have suggested that the focus on tariffs might be overstated from a business perspective, viewing them merely as increased cost inputs. What has the European market's reaction been? The European shares saw a tick up, supported by gains in energy stocks, but with eyes on the potential ramification of US tariffs. The German commercial property market, already suffering from declines, could see further pressure if the global trade tensions escalate. Despite a recovery in some Asian markets after Canada and Mexico reached temporary agreements with the US, the broader threat of a trade war kept investors cautious. Hong Kong shares, after reaching 2-month highs, slipped due to the US-China tariff bet. The US dollar initially rose, reflecting its status as a safe haven currency during times of trade uncertainty. However, this strength was tempered by expectation of reciprocal actions from affected countries. The Canadian dollar and the Mexican peso are expected to weaken due to these tariffs. On commodities, the gold price hit a record high as investors sought safe haven assets amid the tariff war escalation, indicating a flight to safety in financial markets. The crypto market, particularly Bitcoin, experienced a significant drop following the tariffs announcements. Bitcoin fell to about $95,000, influenced by concerns over inflation that could prevent the Federal Reserve rate cuts, making non-interest rate bearing assets like Bitcoin less attractive. Cryptocurrency-related stocks also saw declines in pre-market trading, highlighting the market sensitivity to macroeconomic policy shifts. Meme coins, well, a cryptocurrency associated with Trump, which is the Trump token, lost more than 75% of its value in a short spat, illustrating the volatile nature of meme coins in response to political and economic news. This event underscores the speculative bubble aspect of some cryptocurrencies. And this is something that has been spoken about for a long time. The problem of a bubble that gets created by some meme coins, because these meme coins are not underpinned by any development, so therefore there is no utility. Some of them, some are promising to have utility, but when they get into the market, you often don't see that. So there is an element of raising volume, raising prices, and affecting trading patterns, and as a result, thus creating a bubble in the market. And therefore, one has to be very circumspect when they decide to trade on memes. You better trade the memes that you know, and you better make sure that you understand it's a high risk narrative going on to the memes, and therefore you are able to put your risk assessment measures and then take your risk mitigation strategies so that at least you get out of the market when you need to get out of the market. What are the other influences that influence the trading markets? If you look at the macroeconomic policy side, there are expectations around the Federal Reserve's actions on interest rates, which would be influenced by inflation's concerns from tariffs. And this has led to a cautious approach among investors. On the global economic sentiment, the overreaching fear of a broader trade conflict has led to a risk-off sentiment where investors move away from riskier investments towards more secure assets like gold or even US Treasury yields, which ticked higher post-announcement. China's response, China's quick retaliation with tariffs on US goods and an investigation into Google added to the global market jitters, influencing stock, commodities, and currency markets. Investor psychology. The anticipation of further trade policy actions from Trump, coupled with historical precedents from his first term, has kept markets on edge, with investors reacting swiftly to any news or rumors of policy changes or negotiations. The market response to Trump's tariff announcements is multifaceted, with immediate impact on stock prices, currency valuation, and commodity prices, along a significant ripple effect in the cryptocurrency market. The uncertainty around the duration and scope of these tariffs, combined with global geopolitical tensions, has underscored a need for investors to closely monitor developments for potential further market volatility. And this is the thing, unfortunately, that the Trump administration is becoming a little bit infamous about. It's the negotiation in the public space, not using diplomacy, and maybe the underestimation of what these negotiating tactics represent to the market. They represent uncertainty to the market until the deals are completed. We all understand that President Trump is a negotiator, and as a result, sometimes he will telegraph a movement that the US might make so that the opponent on the other side would understand the impact that they would suffer if they don't bend, just like he did in a couple of these other countries that were refusing to have the planes landing with the illegal immigrants. But be that as it may, right or wrong, the market sentiment is very sensitive to the unpredictability of a standoff between countries. Whether that standoff will result in them at some point reaching out and finding a settlement, but unfortunately the market wants to price what is unpredictable. And therefore this is where the challenge is with these announcements that are made on a regular basis. Let's look at the crypto market in detail. Now, the crypto market has shown signs of volatility in a slight uptick in total market capitalization of 0.2% to about 3.19 trillion, and a significant increase in 24-hour trading volume by 39% to about $104.9 billion. Right. Now let's look at just the detail of what has really been taking place. The price movement on BTC has been consolidating around $96,500, with a minor increase of 0.05% in the last hour. It's hovering near a pivotal point of $96,192,000, with immediate support at $95,068. Right, and the resistance seems to be around $97,624. So this is where you see the pivot point on your technical analysis, and your resistance is at 97,624, and the support at the bottom is sitting at 95,068. Watch out the $96,192,000, because that's your pivot point. Once you breach that pivot point, the next resistance point is 97,000. So you are pivoting around 96,000, but once you are over 97,624, it means you've breached that resistance, and therefore you are looking for a new resistance, and that becomes your support. That's what we are expecting now in terms of the technical analysis if you were to do your chart on Bitcoin. However, this is still dependent that there is no other further market shock that will take away the momentum that you are looking at now. Or otherwise, you may find that it's easy that Bitcoin might just breach the support, which is $95,068 and then go to a lower new support level because of having lost the momentum. So at the moment, we're still bullish. We're hoping we're still positive. We're hoping that at least the breach will be the breach of the resistance rather than the support level. But the pivot is around 96,192. The indicators, if you look at the RSI, right, the RSI is sitting at 35.52, which is indicating the oversold conditions around the RSI, which might suggest a potential rebound. So expect anything, right? If you look at the moving average convergence divergence, it shows a negative divergence with the MACD, which is the moving average convergence divergence line, at about minus 910.46 versus the signal line, which is sitting at minus 86.10, hinting at a bearish momentum in the short term. So that's what you're looking at in terms of the technical analysis of the Bitcoin pivot point, as well as what we are expecting in terms of the moving average convergence and divergence. Now, if you look at the chart patterns, a descending triangle has been noted on the 4-hour chart, suggesting bearish continuation unless there is a breaking point, right? However, the daily chart shows a consolidation within a high base rectangle pattern with a small range doji candle indicating equilibrium. Now, depending on which type of a trader, your longer hour pattern is for your investors or your traders that are not sitting at the trading desk, and your shorter bands represent those traders that are sitting at the trading band and therefore they can react at a point in time. So if you are a trader that trades on a daily basis, even if you're not sitting on your trading desk on a 24-hour basis, but you trade on a daily basis, therefore your 1 hour will show you what is taking place. But you do want to look at your 4 hours so that you can see where the momentum lies. As you can see now, we're looking at the momentum on the bearish side of the band. On Ethereum, so let's look at the bullish expectation before I get to Ethereum. The accumulation points first, they are around $95,000 up to $96,000. Those are your accumulation points. Remember, your pivot point is sitting at about $96,124,000 on Bitcoin. And therefore, your roof, which is your resistance level, your resistance is sitting at 97,000. So your accumulation points are around 95,000 and 96,000, where you would see an opportunity for accumulating depending on where the momentum is at. But if you look at about 98,000, there's a confirmation from a moving average, like the 10 moving average, and that signals a bullish move, potentially targeting 104,000 or higher. So if you look at the 10 EMA, right, that is the EMA at a 10 point. Now the 10 EMA is showing you that, look, there could be a bullish move. And that bullish move, if it breaches the current resistance at 97,000, we can go all the way up to $104,000. And that's why, therefore, if you look at your accumulation points, your 95,000, 96,000 are your accumulation points. I'm just giving you a technical analysis in terms of the Bitcoin. Let's look at Ethereum. If you look at Ethereum's, the ETF flows needed to exceed about 100 million a day to maintain the momentum, indicating institutional interest could drive prices. So that's why you see this weak momentum on Ethereum, and we really need to gain this momentum around the exchange traded fund of almost like $100 million a day, so that you can have the right flow that will give us the good support in terms of the momentum. Now, the technical indicators, without specific data, general market analysis suggests that ETH might follow BTC's lead, Bitcoin's lead, with a breakout above current resistance level being critical to a bullish trend. If you look at the other altcoins, really the performance is mixed, with some showing weak technicals against strong Bitcoin accumulation. But one thing that we can say, the altcoin season, it seems as if there is a dampening of the mood on the altcoin season. If you are looking at the altcoins versus the Bitcoin line, you can see that there's a loss of momentum on the altcoins, while Bitcoin at least is holding up very well between the resistance and support that we had spoken about earlier on. Altcoins might rotate into favor if Bitcoin stabilizes or break out. Given the current market rotation, signals from neural nets are not showing any movement now, other than the fact that, as we know, that the positive or the bearish bull coin will have a positive impact in terms of the sentiments on the altcoins, as well as the altcoins regaining and rebounding. But still, it's a general statement. You have to look at various altcoins in specific. If we look at the fundamental side, like I said, the market sentiments, the introduction of the new Trump tariffs have introduced volatility with a particular impact on meme coins like Trump coin, showing a market sensitivity to political news like we had stated before. If you look at the institutional flow, there's evidence of a strong institutional accumulation for Bitcoin, which might suggest a foundation for a longer-term bullish trend if these investors continue to hold through current volatility. And you've got two institutions that really driving the accumulation on Bitcoin. One, it's BlackRock and Michael Saylor. Michael Saylor on one side and BlackRock are really driving the accumulation. Now, Michael Saylor is via their institution, which is MicroStrategy, and BlackRock on the other side. And if we really look at the growth of stablecoin liquidity is crucial for market stability. However, the exact impact on specific token wasn't detailed. So what I've reviewed, I couldn't really find the detail on stablecoins. But the only thing with the stablecoins is just make sure whichever stablecoin you use to keep your dry powder. When you pull your money out of trading and you decide you'll wait and see which token you want to invest in, you keep it in our currency as the crypto community. And what we do is we have stable coins. Now, stable coins are the coins that are pegged to a fiat currency. Most it's the US dollar because that's a global reserve, right? So if you use USD, DT, I apologize, you must just make sure that you check the stable coin that you are using as your dry powder or you convert your fiat to. You must just make sure that the proof of reserve of that stable coin is sound, because you want the pegging of the stable coin on a one-to-one basis. What I mean is one token of USDT is equivalent to $1. And therefore, whenever there is movement in the market, you always want to make sure that there are adequate reserves that will make sure that pegging still remains at that point. And the reason for that is it means your dry powder is then denominated on a dollar. Whatever that is taking place in the market, you are as exposed as a dollar is exposed to the market. And therefore, sometimes I had given advice to some traders to say to them, look, I'm considering keeping my dry powder on a specific token. In my case, Bitcoin, right? And the reason is Bitcoin holds value than any other token in the crypto market, period. I know I may sound like a Bitcoin maxi. The point is I'm not a Bitcoin maxi. I'm not trashing in the altcoins. What I'm saying is you want to hold your money where the value will be held up, right? You don't want to go and take a stable coin where the proof of reserve is not 100% and therefore you might lose. So at some point, when there is this challenge on the dollar's dominance, this is something as a trader that you should think about now, so that at that point you would know exactly what will be your best reserve in terms of the value of your capital or the value of your money, right? Okay, let's move on. BTC breakout at 98,000 could lead to targets around 104,000 or 110,000 US dollars, considering historical resistance and the psychological importance of round numbers. If there is a significant push above the current resistance, might aim for 4,000. Remember, we are sitting now at about 2,600 on Ethereum, and therefore, if really Bitcoin breaks out, Ethereum might break out, and the next point could be 4,000. There is an element that one has to look into Ethereum, and hence we're going to spend some time deep diving on Ethereum. The other altcoins, without specific data, a general expectation is that a strong Bitcoin move could lift altcoins, with tokens like LD, good, and SUI and Aave potentially seeing rebounds if the market sentiment shifts positively. The crypto market is at a pivotal moment where technical indicators suggest a possible consolidation phase for Bitcoin, with potential for bullish and bearish scenarios depending on whether it breaks above current resistance or fall below support. Fundamentally, institutional interest in macroeconomic news like tariffs continue to play a significant role in market direction. Accumulation points are likely around the current support levels for major cryptocurrencies, with potential for bearish shift if these levels hold and institutional buying continues. Always consider these analyses as part of a broader investment strategy, including risk management and further due diligence, as markets can move rapidly based on new information or unexpected warning. Now let's do a deep dive on ETH, right? Since January 2025, Ethereum has experienced a mix of volatility and consolidation influenced by both macroeconomic factors and internal network developments. Let's look at what has been taking place. If you look at the price performance, start of January, Ethereum began the year at around 3,350. February 10th, 2025, it was trading approximately at about $3,249, showing a slight decrease of about minus 3.01% from the start of the year. The market cap and liquidity, Ethereum's market capitalization has been seeing fluctuations but remains a significant player with a market cap of about $379 billion as of the latest data, reflecting its continued dominance in decentralized finance, non-fungible tokens, and smart contracts platforms. There's the Petra upgrade, right? It's an upgrade combining Prague and Electra, focusing on improving scalability and reducing transaction cost through account abstraction, which is the EIP 3074. And this is one thing that has been of issue with Ethereum, the gas fees. So this upgrade, the Prague and Electra, this is what they are really trying to address, the Petra upgrade. What is expected from this upgrade is to enhance the user experience and increase adoption by simplifying transactions and reducing gas fees. This could potentially drive ETH's price up due to increased utility and attractiveness for developers and users. Continued developments and adoption of Layer 2 solutions like Optimism and Arbitrum have been pivotal. And these solutions have already started to alleviate network congestions, which might lead to a more stable transaction environment, indirectly supporting Ethereum's price by enhancing network efficiency. The ETF news, discussions and anticipations around the Ethereum ETF, especially after Bitcoin's ETF success, could significantly influence Ethereum's price, potentially drawing in institutional investors. If we look at the technical analysis like the moving averages and we look at the 50-day moving average, currently at 3,000, showing a downward trend from January, indicating a bearish short-term outlook unless there's a crossover with longer-term averages. If you do a 200-day moving average, it's sloping down since early 2025, suggesting a weak long-term trend. Price below 200-day moving average often signals a longer bearish phase, which is what we're seeing now in Ethereum. And that's what the 20-day moving average is telling us, right? If we look at the RSI, the relative strength index, the current RSI below 30 indicates Ethereum is in an oversold condition, hinting at a potential buying opportunities. And RSI above 70 might suggest overbought conditions, warning of a possible price correction. So that's why now you have to make a decision whether for you, does the RSI indicate accumulation? But at the moment, it's below 30. And when it's below 30, it's an indicator that the token is oversold. So if it's oversold, then it means there's an opportunity of buying at a low price, because if it's oversold, then there's an oversupply, and as a result, the price goes down on it. Let's look at the moving average convergence divergence, the MACD. The MACD line versus the signal line. As of the current, the MACD is below the signal line, suggesting bearish momentum. However, looking for a bullish crossover could signal a good time to buy. So at the moment, still a bearish momentum. If you look at where these lines are at, the moving average convergence and divergence line compared to the signal line. So things are bearish on Ethereum, but bearish doesn't mean bad. It depends whether is it a sustainable bearish, but this is an opportunity. If you look at your RSI, that you should consider accumulation, but then you must look at which points. Hence, I'm giving you these points around the pivot points and where we are on the technical side. So let's look at the candlestick patterns. If you look at the small range doji candles and the hammer formations at the support levels, they suggest potential reversal points. But these need confirmation with volume and subsequent price action. So now you look at your candlestick patterns, your small range doji and your hammer formations are giving you a potential for a reversal point, but then confirm these with your volume and the price action. Let's look at the support and resistance levels, right? Your support, the immediate support is sitting at around 3,200, with a more significant level at 3,000 based on the past price action. And your resistance is currently sitting at 3,500 with a psychological and technical resistance at 4,000. Right. So the importance of the technical tools, just for me to emphasize, because it's the first time I'm telling you about the technical tools, your moving average, they help identify the trend direction and potential reversal points, right? The interaction between the short and long-term moving averages can signal trend changes. So if you want to check where your trend changes are going to be, you then choose between your 10 or your 200-day moving averages, but then they will show you the trend reversal if you use that band. Your relative strength index, your RSI, is useful for spotting momentum and potential reversal zones, especially when extremely high or low, right? And then your moving average convergence and divergence, or your MACD, it provides insights into the momentum changes and the potential trend reversals through crossovers. That's what we're talking about when we're looking at the line versus the signal line. So when they cross, it gives you the indication around the trend. Depends where they cross though. The candlestick patterns, they offer immediate market sentiment, with patterns like doji or hammers indicating indecision or reversal possibilities. Support and resistance, they are crucial for setting entry and exit points in trading based on historical price reactions. Projections short term, given the oversold conditions suggested by the RSI, a rebound to about 3,500 might occur if positive developments like the exchange traded fund news or the network upgrades kick in. In the medium term, with the Pectra upgrade and potential regulatory clarity, Ethereum could aim for 4,500 to 5,000. Assuming market sentiment improves and a broader crypto adoption continues. On a longer term, between 2026 to 2030, analysts are bullish on Ethereum, reaching between $10,000 to $20,000, driven by institutional adoption, network improvements, and the expansion of the decentralized finance and the Web3 applications. On a longer term range, while Ethereum now is sitting at 2,600, it's expected by 2030 it could reach anything between 10,000 to 20,000 US dollars. So you decide when is the right time to accumulate. Okay, what is the advice that I'm giving to the traders? Watch out for technical breakouts, especially around resistance level, both the upgrade or the ETF news on Ethereum. The accumulation point, if Ethereum tests and breaks below current support, it could be an opportunity for long-term accumulation, considering the network fundamentals. And remember, we were talking about the support and levels on on Ethereum, there is the support sitting at about 3,200, right? Now we know that already the token is trading at 2,600. And therefore, this advice that says Ethereum tests or breaks, if Ethereum tests or breaks below the current support, it could be an opportunity for long-term accumulation, considering the network's fundamentals. So I'm telling you that this is an opportunity to accumulate Ethereum on a long-term window, not on a short term. So if you look at the short term now, where Ethereum is at, it's struggling to get momentum just to get to $3,000, right? Because it's sitting at 2,600. But this is an accumulation point. So those that can accumulate Ethereum, they should. What was I doing yesterday? I was accumulating Ethereum. Being brutally honest, I'm not saying this is what you should do. I'm not offering financial advice. I'm just offering my recommendation and explaining my trading and what I'm doing. So where Ethereum is at now, you're not going to get Ethereum at the lowest point because you do not have any guarantee that Ethereum may not retrace lower. We just spoke about the tariffs and the impact of the tariffs in the trading markets. That's what we spoke about earlier on. So the announcements that are being made by President Trump have just spoken about the impact, the disruptive nature that they have in terms of the sentiment, the volume, the reaction of the market, right? So I'm not giving you a guarantee that it's as low as it could be. But if you do your technical analysis on a longer term basis, this is the accumulation point where Ethereum is at. But if you look at the shorter term basis, you can then go and do your MACD line versus your signal line and see where you think the momentum is at and where the convergence would be and where you expect the point would be. It's up to you, depending on the window and scale of your investment. But if you're a long-term investor, the technical indications are telling you this is an accumulation point, or no, the accumulation phase. So you are in that range of accumulation, not you are at the price at which you accumulate. You are in the range as a long-term investor in crypto. One thing, however, I've been telling you on a number of days that Ethereum has a 10% dominance in the crypto market, while Bitcoin has 60%. So the fundamentals of Ethereum are sound. The development on Ethereum, phenomenal. You can go and check what has been developed on that ecosystem. The gas fees have been a problem. And therefore, if these upgrades will address the gas fees challenges with Ethereum, and the Ethereum Foundation, Vitalik, and the people around there would also deal with the issues that they have, there is a potential that Ethereum might rebound. So your is as good as mine, but this analysis combines both technical insights as well as the fundamental, just to provide immediate trading decisions and fundamental developments for longer-term investment strategies tailored to the current market environment for Ethereum in 2025. So I wanted to do this deep dive just to talk about Ethereum, because in my analysis now, I'm accumulating some Ethereum while I'm keeping some dry powder on BTC where I can. And therefore, any investor that is investing now or trader that is trading now, you have to decide where you are trading. But once you start to talk about Ethereum and Bitcoin, these investments that are not the high risk investments like you would find an investment onto a meme coin, which we spoke about earlier on, how volatile and sensitive it is to these announcements and geopolitical developments. Bitcoin is holding the crypto market. If you look at the Bitcoin graph compared to the altcoins, and Ethereum on the altcoins or the non-Bitcoin tokens is not doing bad, as it still maintains its dominance. Yes, there are many traders out there who are saying Solana is the next Ethereum, and some are saying Sui is the next Solana. Do your own analysis, make your own decision what you think would be, right? look at the utility, look at all these things that affect the valuations on tokens, but then also look at the development, look at the decentralization, look at the utility and usability of those tokens so that you can then make a decision where you think your investment should be. Okay, that's it for today. I hope this episode has been valuable. One of our community members gave a very good feedback to say, last time in the recording that I had on AI, the background sound was a little bit noisy. I apologize for that to the community. I'll make sure that it doesn't happen again. I wish you profitable trades. May everything that we talk about become the baseline that you use to do your further research and make good decisions for your bet. Thank you very much. Talk to you later. Bye.